So I wanted to talk about the full-time employee count. It's one of the most overlooked and oftentimes one of the most misunderstood calculations that relate to the employee retention credit. I wanted to go through the calculation, you can see exactly how to do it, but also highlight some of the misconceptions or misunderstandings around it as well, so you don't fall into the same trap. You may recall, why is this important? So you may recall from other videos I've done, the full-time employee count is super important because it determines whether or not you as a taxpayer, and remember taxpayers across all your businesses, not just any one individual business, that you as a taxpayer are considered a large employer or a small employer. And this is important because large employer, the wages you're able to take into consideration for the purposes of the ERC is very, very different from a small employer. A small eligible employer could take into account all the wages when determining the qualified gross wages related to the ERC, whereas a large eligible employer can only take into account the wages for employees who are not able to provide services as a result of either the partial suspension of operations or the decrease in gross receipts. Very different calculations and has a big impact on the ultimate number, ultimately, what a taxpayer is eligible for as it relates to the employer retention credit. As with always, I like to actually show rather than tell. So let's take a look at what the notices actually say as it relates to large versus small employers. So in order to identify whether you're large or small, you have to identify the average number of full-time employees in 2019. That's item number one. So we're looking at employees in 2019, not 2020, not 2021, when the eligible periods were, the number of employees you had in 2019. So we're looking at the average number of employees in 2019. That's the first most important thing, is we're looking at 2019 rather than 2021, where we're claiming the tax credit. A very common mistake there, looking at the wrong time period when calculating your average number of full-time employees. Now, another area of consternation, a lot of folks get caught up, what is my average number of full-time employees? Particularly if you have a business where there's lots of turnover, there's lots of seasonality, maybe you have part-time and full-time, how do you actually calculate it? So thankfully, the government gives us exactly how to do it. So a full-time employee is an employee on any calendar month that worked at least an average of 30 hours per week or 130 hours per month, right? So, right away, you can kind of see, well, wait a minute, which one am I calculating? Am I using 30 hours per week? Am I using 130 per month? There's two different ways to determine a full-time employee. One, if you're paying the employee on a monthly basis, we're looking at the total number of hours they worked in the month. If you're paying them on a weekly or every 2-week basis, we're going to look at how many hours are they working in a week. And normally when we're doing this, we're actually looking at both. And we're looking at both because we want to be comprehensive in our analysis. We look at the number of hours they work per week, and then we sum it up by month. No, I'm going to show you an actual sample of how we calculate this. 130 hours per month or 30 hours a week. You might be saying, well, hey, if it's 4 weeks in a month, that's 120. Well, actually, if you take 52 divided by 12, there's actually 4.2 weeks per month on average. So hence the 130 hours of service for the month. And so you can see here that 130 hours in a month is treated as the same as 30 hours of service per week. So that's number one, is full-time versus part-time. Now, we have to look at this on a monthly basis. So we're averaging the number of full-time employees out on a monthly basis. Now, this goes back to section 4980H of the code. So you might be wondering, well, what is 4980H? Well, that has to do with the Affordable Care Act way back in 2010. And there's different rules for large employers versus small employers. So that's where this whole section came from, is how you determine a full-time versus a part-time employee. Well, go back to 2010 Affordable Care Act and determine full-time or part-time employee. If you happen to have a business that started in 2019, you don't have a full year of 2019, well, you have to look at the months in which you were in existence, and you can't average out. For example, if you're only open for 6 months and you had 100 employees in those 6 months, you didn't have an average of 50, you had an average of 100 over those 6 months. In order to determine the average, we have to look at every single month. We add up the number of full-time employees we had for the month, and then we divide that number by 12 to come up with our average. Well, if you weren't in operations for all 12 months, you prorate it accordingly, which is pretty logical, but some people make that mistake as well. They were open for 9 months and they divide by 12, right? And that's going to make it look like you have fewer employees. IRS says, no, that's not how it works. So that is the calculation of how we determine the full-time equivalency, the number of full-time employees. Now, let me show you a example of an actual report that we have that looks at this. So this is an Excel sheet, and if you need this Excel sheet, just shoot me a note. But what we do is we look at I'm not going to go to these other sheets because that has employee names on here, so we blocked out the employee names here just for confidentiality reasons. What we do here is we look at every employee, and you can see we have payroll data, and we click on January. Looks like we have a little circle of death here. And I can see here that this employee here had 13 hours in the first week of January, 40 hours in the second, and so on and so forth. So we can see all the hours that they are working. So I built this out in a pivot table because this allows us to do the analysis much quicker, consolidate some data together. But you can see, for example, in February, we had 2 pay periods in February. And it's a huge deal, so it's taken so long to open. So the 8th and the 26th, and so on and so forth. So we go here and we look at every single month. And so you can see for the employees here, we have the hours they work per month, and we have a grand total for the entire year. Now, this is a pretty large file here, so I'm going to go ahead and scroll to the bottom here. And so you can see here, we sum up all of our hours here, and we have over 1,000 employees. So at first glance, you go, oh my gosh, 1,000 employees in 2019. There's no possible way that this taxpayer is going to be eligible as a small eligible employer. This particular client here had a lot of part-time employees, a lot of temporary employees, a lot of turnover. And so look at the total hours per month, total employees. And what we do is we summarize that into this worksheet here. Let me make sure the data is covered up as well. It is. Go ahead and resume that share. And so you can see here, we count up the number of employees on average for the entire month. How many employees do we have on per month? So even though we had 1,000 total employees over the course of the year, because of the turnover, because some people only worked for maybe a month or a couple of weeks at a time, the actual number of full-time employees, the number of employees that had more than 30 hours per week or more than 130 hours per month was significantly less. And so you can see when we look at every single month here, we've counted up our employees: 82, 117, 97, 124, 124, 107, 108, 140, 108, 125, 122, 103. So on average, when we take that number, we divide it by 12 months there, we have 113.08. So this particular client was classified as a large eligible employer in 2020, but a small eligible employer in 2021. That was a super critical distinction because how the tax credit was being calculated in 2021 now changed, right? Now they're eligible for the wages that they're paying. There's a lot more wages they can pay that they're paying that they're eligible for in 2021 that they weren't eligible for in 2020. So that's a full-time equivalency test, and you hope that's helpful to understand a little bit about how we approach that. But super critical to do the test to know exactly how many full-time equivalents did you have, because one of the first things the IRS asks that's actually in the request list is how many full-time equivalents do you have and how did you determine it, right? And if the question is, if your response is, I don't know, we assumed, well, obviously that's not going to bode well. So you want to make sure you have that full-time equivalency test on file. You can point to numbers that show this is how many hours my employees worked in 2019. This is how many employees worked more than 30 hours per week per month, and then we average it out. So that way you demonstrate that, yes, we did indeed apply and we followed the rules and regulations as outlined in the notices. So hope that's helpful. Reach out if you have any questions.